Tesla stock is now trading below $113, but given its seeming volatility, what do investors expect from the company at the end of January 2023, and what kind of price would we see in the markets? Even the most skilled market analysts find it challenging to forecast the long-term price of Tesla shares, but what do experts believe the company's stock will be worth in the upcoming months? The share price of Tesla Motors Inc. started 2022 at $352.26, but fell to its lowest point on December 27, 2022, at $109.100, marking a decline of more than 50% annually. According to the extras, Tesla stock will reach $246 in the first part of 2023, a significant gain over current prices. The price would increase by an additional $54 in the second half of the year, bringing the total to $300 for the year, up almost $200 for the year, up almost $200 from earlier this month. In comparison to November 2022, Tesla revealed plans to reduce production at its Shanghai facility by over 20% in December. China's zero-COVID policy has sparked protests all over the nation. The Shanghai factory can produce 85,000 cars a month at full capacity, but Musk's acquisition of Twitter on October 27, 2022 for $44 billion has already had a noticeable impact on Tesla's stock price. Elon Musk, the CEO of Tesla, bought Twitter, which financial experts say is one of the most expensive deals ever. In his most recent tweet, Musk announced that all of the company's top executives had been fired. Musk raised $15 billion by selling 15 shares of Tesla stock, and Musk has promised that he won't sell any more now that the acquisition is complete, which will be a relief for Tesla's investors. However, many remain skeptical of Musk's ability to run Tesla, SpaceX, Twitter, and his other businesses. Since the settlement was announced, the value of Tesla's stock on the market has dropped by 34%. Interest payments on Twitter's debt are expected to cost the company about $1.2 billion per year if interest rates continue to rise. Second, investors are concerned that Musk may turn his focus away from Tesla while he works to turn around Twitter. However, given Tesla's devoted customer base, the company's focus on turning around Twitter may cause Musk to prioritize increasing Twitter's revenue and profit in 2025. There is a significant likelihood that the company's indications that the new Cybertruck will be available within the next year will come to pass. The Model S marked the start of Tesla's commercial vehicle production line, but the company didn't have strong market control until it did. Despite recession threats brought on by sluggish growth and inflation concerns, buyers must be able to afford Tesla at a lower price thanks to the mass production of the more economical Model 3 sedans. Elon Musk predicts a slowdown in EVs, a demand for the Tesla line in Q4, and he still intends to sell every car produced despite the fact that prices are rising as a result of delivery delays and transportation problems. On Monday, Adam Jonas, an analyst at Morgan Stanley, reduced his price estimate for Tesla shares from $383 to $353. Analysts believe that the current environment will be the testing period for Tesla Inc., and that its strategy to better manage the inventory will be crucial going into 2023. However, Tesla management is confident that they have a vast array of applications and plants that aggressively ramp up production in new factories like Shanghai, Lynn, and Austin. One explanation given for why the valuation would increase if Tesla management declares its intention to buy back stock is production challenges. At Tesla's Q3 results call, Musk stated that the company is planning a sizable repurchase for the coming year, probably in the range of $5 billion to $10 billion. But that the final decision would be made by the Tesla board by reducing the number of outstanding shares by purchasing them in the market. This would give existing shareholders a larger ownership position in the company. And Tesla bull Alexander Merce has established a change. The stock price of Tesla has fallen to a 2-year low, prompting investors to call on CEO Elon Musk and the board to buy back shares. A year ago, Tesla was worth about $700 billion more than it is now. .org petition calling for its prompt reinstatement by the end of the year. In accordance with the merger, this would enable Tesla to profit from its sharply discounted stock price and avoid the 1% excise tax that will be applied to buybacks exceeding $1 million starting on January 1st, 2023. A stock repurchase would demonstrate confidence in Tesla's future performance and return funds to shareholders as recommended by investors and other stakeholders. Out of 5,807 petitioners, one wrote, "I'm a huge supporter of Tesla and a former investor, but in order to preserve my capital, I had to go to the dark side. I was able to recover half of my losses by shorting the company, but I need to see some sort of board movement before I make another wise repurchase." Board members still believe that Tesla is a worthwhile investment. For a number of reasons, investors' confidence in Musk's ability to lead Tesla has waned recently. Although the company's stock has been declining, investors are holding out hope that it will rebound by the start of 2023. Tesla's research, development, and implementation skills to address chip shortage are responsible for numerous innovations, including effective chip scarcity management. Analysts predict that the EV market will continue to expand and that Tesla will benefit greatly as it maintains its leadership position due to the stock split, which has made Tesla's stock much more liquid and accessible at a lower price, if not value. According to Deutsche Bank analysts Emanuel and Rosner, Tesla has a major technological and electric vehicle manufacturing edge over its rivals in a year where the company is expanding rapidly, entering new markets with a Cybertruck, semi-optimizing its manufacturing footprint, and profiting from the decline in inflation in Iran. He stated that, as Roser indicated, there is a great deal of opportunity for fully autonomous growth with a 5% increase in the global take rate on new sales and the potential to boost gross margin by 80 basis points. However, this is not our base case scenario, so we anticipate that these factors will cause the 2023 Street projections to be revised upward. Wall Street has credited Tesla's exceptional performance in the first 2 quarters of the year and optimism about new government regulations that will encourage EV adoptions in 2023 and beyond, with boosting investor morale after it had somewhat declined in August due to worries about foreign markets. Sell, we project a more modest increase of 200 basis points and gross margins to 31.5% in 2023 from 29.5 to 300 basis points improvement from 2022 levels, as well as an increase in adjustment EPS of 7.15 from 6.60, which is significantly above the consensus estimate of 5.82 cents. Rosner estimated cost savings of $3,200 per vehicle, or 5.5% of the ASP. In 2023, demand might be increased if Tesla introduces its Cybertruck and Semi vehicles, as Rosner mentioned. Going forward, we want to see an increase in both gross profit and operational margin as volume increases. Rosner thinks that Tesla's strength and price make it one of the most fascinating tales in the automotive sector, with a superior cost structure to boot, well-carried-out strategy, supply assurance, and significant new capacity to support quick growth. Subscribe to this channel to get the most recent information about Tesla stock. If you enjoyed this video, hit the like button to watch it. I'll see you in the next one.